Hello guys, welcome to the Trading Parrot. Let's do an update on Cardano. Cardano is really having a tough time in here. Let's observe this closely on the weekly time frame. First of all, we had a breakdown on the 10th of March below this strong support. We managed to put a hidden divergence, and from there we challenged the breakout of this trend line downward sloping, but unfortunately that move only made it into a revenge rally. As you can see, it hits the yellow line and sees another rejection. Thanks to that, we have made a trip into the median at 45, and we're gonna have to do what needs to be done. Basically, we need to copy this line, place it from this pivot, and connect it with the next pivot low. Why we do that? Because we want to see if we are producing a layer 2 breakdown. We already had a breakdown in this area, and as you can see on Sunday, we are confirming a layer 2 breakdown. Knowing this is very important because this is telling us that the momentum has slowed down for a second time, and it helped a lot answering whether we are going to reclaim the triangle or if we have reduced likelihood of doing so. As you can see, on Sunday we broke down the support from the triangle, and we are on the second week on our way to the next level of support at 61 cents. The best bet scenario for Cardano is to reclaim as soon as possible not just the triangle but also the horizontal support at 68 cents, so we get a chance to battle once again with 82, which we clearly failed to do around mid-May. Now if we look closely and we drop the time frame to the daily, we're gonna notice that around this area of the support we have produced a head and shoulders that is almost about to break down in this area, and I'm overlapping all this price action with the liquidity pools to see if it's likely that we are gonna actually fulfill the technical target, which I have calculated as the head, and then repositioning that around the neckline. As you can see, the neckline is not necessarily horizontal, it's got a bit of a slope, and the target is pointing towards 40 cents. Halfway through around the 50 cents we have all the liquidity. We could say the most substantial one is located around there, and I'm placing as well a resistance on the daily RSI to see if we could be seeing eventually in here a breakout above 45 RSI. If we did that, then it's good news for the longs. At that point, if we see a breakout in here towards the global resistance, we're probably gonna be seeing the price action reclaiming the support and turning the head and shoulder into just a liquidity hand, a fake out move to the downside just to trap the shorts. If you pay attention to this price action in here on the daily and just move your eyes a little bit to the left, you're gonna notice that there's a bunch of patterns in this area in here, and I give you some time to think about it because I want you to see how it play out the past time that we have a similar head and shoulder. Yeah, I'm talking specifically if you place a neckline like in here, you can see that we had another head and shoulder of larger proportions to this because the head made it all the way to 114. We were in the area of the breakdown, precisely in this area as you can see, and we didn't break down. Actually, if we would have succeeded with the bearish target, that would have moved to 0.02, which is absolutely crazy, and it's good that we didn't call out for any bearish target from there because that is ridiculous. So now this one is a little bit more shallow, it points to 40 cents, but I suspect, and I'm trying to find a way that this could fail so we can reclaim the triangle and instead going for where the price seems to be a bit more attractive, which is around the 90 cents. That is where we see this hill of liquidity. From the move down into this low, back up here, we only managed to barely hit the 50% Fibonacci level of the retracement up. We couldn't manage to get into the 618, the golden pocket, and as you can see, the liquidity is precisely at the golden pocket. So if we could manage to fake out to the downside, create a liquidity pool, and then make the next move, take all this liquidity, ideally benefiting from this increase in shorts accumulated in that area, I tend to lean towards that target more than thinking that we are actually gonna fulfill the technical target of 40 cents. A middle ground could be that we go into 50 cents. That is a new low relative to all the lows that we've been having. Notice that this low and this low in here are very similar, but we haven't wiped this area. So I will say the highest scenario, in my opinion, is to go and take the 90 cents at some point around July. There is still a decent chance, maybe a 30% that we go into 50 cents, but we actually want to be seeing is if we get into 90 cents that we can break out from the resistance of the triangle, ideally with the momentum doing the same from the top of the trend line, so we can actually target levels above $1. And there is a bunch of news when it comes to Cardano, but not necessarily the most bullish ones, as you can see in here. I'm gonna start with the third one, which is Cardano to launch night bonus rewards for ADA stakers. Dual token reward scheme slate to start 16th of June incentivizes additional ADA lock-in, tightening liquid supply and raising yield attractiveness for long-term holders. That shows us a 6 out of 10 in terms of bullishness. The top bullish news at the moment is Cardano breaks above 0.64 as staking addresses top 1.3 million. But as you can see, the price didn't manage to hold there, and actually the 64 was the last time we were still inside this triangle. Now we are trading below it. And the top one news in here, which actually has a 3 out of 10 in terms of bearishness, says that Solana co-founder calls Cardano's Bitcoin treasury plan so dumb. Charles Hoskinson proposal to swap 100 million, around 1% of the supply of ADA for Bitcoin stablecoins, drew sharp criticism, reviving fears of near-term sell pressure before any eventual buybacks. So you see, there's tons of fears around Cardano from the point of view of fundamentals and news, and technicals are not necessarily very attractive, being for the first time below this support. I personally tend to believe that there's gonna be some fake out in here, and we're still gonna trap the 90 cents at the very least in this cycle. Thanks so much for watching. I'll see you in the next one. Bye bye.